I used to preach against day trading, and I still do to some extent. I try not to do too much day trading, but I find if I wait and pick my spots carefully and do something like opening gap reversals, I tend to do okay. I tend to be able to pick up a little money here and there. It's when I try to chase my own tails when I get into a lot of trouble. But these opening gap reversals, I kind of see these more as an intraday position type of trade. You've got a bigger picture set up. And this is kind of a textbook example here. In fact, it looks a lot like the example I'm going to show you in a second. But you can see this stock is going up really, really, really nicely and then makes this big fat gap down. Sometimes you'll get a bit of a pullback and then you'll get a big gap down. I like those too. Make sure you have plenty of liquidity. So you can see this is These uranium stocks have been on fire, but like I told my peeps a while back, they just really haven't let us in just yet. Okay. So when I saw this opening gap on this one, I said, aha, this might be worth going after. And this stock has, make sure your stock you're trading has plenty of volume. Okay. Make sure it's in a really, really good trend. Just if a stock's going down and gaps lower, don't try to play that reversal, okay? Because there's a lot of people wanting to get out, and that gap just put more and more pressure on them. Whereas if a stock is really trending and it gaps lower, you might have bargain hunters out there. You might have a floor trader, if that exists anymore, a market maker, whatever, somebody who buys positions for a firm, okay? They might have missed the boat. They might need to load up a little bit on the stock, or some institution might want more exposure to uranium in this particular stock or whatever. So they might use it as an opportunity to add on. Another theory, and I suppose it still makes sense, but I was thinking more back to the New York Stock Exchange stocks back when you actually had a specialist for a stock. I guess you still do. I don't know how that works. Or a market maker, if you want to look at it like that. The NASDAQ, if they have to buy and sell stocks, they're forced to, so you got a specialist or a market maker for you, he's on the hook to buy the stock. But if that stock gets whacked, he's going to try to buy it at as low a price as possible. And he doesn't want a bunch of inventory, okay? So whatever he brings in, he wants to be able to unload later in the day to make a profit. He's got to feed his family too. So you're panicking and you're freaking out because your stock got whacked overnight, or God forbid, you get a margin call, which you have to unload some stocks fast. He's like, oh, you want to sell me that turd? How about $3 lower than what it was last night, okay? And that's a little game that they play. And you're basically, if provided you're not already long, but if you see these opening gap reversals begin to unfold, you could go in and you're basically playing on the same side as the market maker on these. You can see nice little reversal in this particular one. Now, this is a 30-minute chart. And two things. One, as I said ad nauseum, I've gone to a longer time frame intraday because I find I'm not watching every zig and zag so much. And I've said it 1,000 times, but I think I accidentally changed my charts from a 5 to a 15. And I remember trading E-minis. I went like 3 days without a trade. I'm like, what's wrong with me? Why can't I find a trade? Because I lost money on 12 of them last week, a dozen of them, and I couldn't find a trade. And then like on Wednesday, I got a setup or whatever, and I took it and I made a little money. It's like, oh, okay, well, that's cool. And then once again, I go back to no setups. Well, somehow in the process, I absolutely changed my charts to a 15-minute chart. Now I went to a 30-minute chart so I could see the forest for the trees. Taking one step further, if you're trading the OGRes, you might want to take an occasional peek at least at your daily charts, because that little zig and zag is going to be much, much, much smaller on a daily chart. If you're watching a 1 minute or 5 minute chart or whatever, it's going to look like these huge moves, and you're likely to get sucked in before the real move ensues, okay, on a fake out. But anyway, so this is the post that I put into Facebook a little while ago. OGRe is opening gap reversal, okay? So there's your opening gap there. Okay, the day before the stock is up here. Again, this is a 30-minute chart. So the stock begins to rally. So I put in a stop, an entry stop above the market. Okay, it gets triggered. So I go long 200 shares, and this is in the model account. I just do trade small here. So it's something reasonable. If you look at this and say, well, I could do that. Okay, so you're looking at what, $3,000 margin round number for a trade like this. Anyway, initial profit target in this particular case, I figured 1 point would be about right. Okay, which would put you down toward the old lows. If it's a true opening gap reversal, then it shouldn't go down to the old lows after triggering. So it did rally up over about an hour or so, hit the IPT. At this point in time, you take off half of your profits, you get that stop to break even, and then you trail loosely on the remainder. Now, in this particular case, I haven't loosened that stop any because it hasn't made a huge move higher past the initial profit target. But if these things work and you use let's see if I have the trades there. There's the trades right there. If you use a stop to get you in, okay, so you put your order in, there's nothing to do. You get triggered in. What do you do then? Okay, well, you've already decided 1 point is going to be your initial profit target and your initial stop. So you can put in a limit order at that 1 point, and that's what I do. I usually don't use limit orders that much, but for something like an opening gap reversal, and then possibly if it's some kind of wild and crazy stock that's kind of spiky, like that ATAI, I might put a limit order in. I might also think about bailing out in after hours a little bit more than I have in the past. But anyway, you could put in an automated trailing stop. Now, that's something I would never recommend for position trading, okay? Because you might get a spike one day, that stop will come up, and you'll get knocked out of your position. However, for intraday trades, if you have an initial profit target, that aforementioned spike might hit your IPT, and then your stop comes to break even at that point. And then if the stock keeps moving higher throughout the day, that trailing stop just follows it all day long, and you have the potential to capture a really good move.